Good morning, students. So, through this video lesson, we are going to learn about subsidiary books, which we are using in financial accounting, where we are recording uh, monetary transactions in the books of accounts. So, that subsidiary books part will be known through this video lesson. So, through this video lesson, what are the outcomes we will learn? So, let us see. So, learning outcomes are subsidiary books. What is the meaning of subsidiary books? How many books we have? So, why we are using subsidiary books? So, like this we will learn. So, in subsidiary books we have purchase book, sales book, cash book, purchase returns book, sales returns book, bills receivable book, bills payable book. These are the books where we see in subsidiary books. In addition to this, we have one more subsidiary book, that is journal proper. Journal proper. These are the 8 subsidiary books we will learn through this video lesson. So, we will see first what is subsidiary books, why we are using subsidiary books. So, let us see. Subsidiary books are the book of original entry, and it is also called primary records because the first entry of transaction is made in subsidiary books. On the basis of subsidiary books, postings are made into concerned accounting afterwards. Postings of each entry becomes easy, as one type of transaction are recorded in one books, so it becomes convenient to locate any desired transaction. Important descriptions about the transaction is also made in the related books. So, a lot of information related to the transaction is easily accessible. They may be expensive in case of small business, as in a small business it is best to keep journal. So, here in the previous video lessons what we discussed. So, in any business organization, monetary transactions are recorded in a journal. In that journal, whatever the monetary transactions are done day to day, those monetary transactions are recorded in that journal by using applicable principle. Of course, here we are writing all types of accounts, all types of items, all types of transactions are recorded. So, these all type transactions may be done day by day, day to day, or weekly, monthly, whatever it is. According to the nature, we have to write the journal entries one by one in a chronological order in that journal, right. But when time comes, which type of transaction is done, when it is done, how much amount is done, like that details we may not get properly, because there may be a confusion, because all types of transactions are recorded at one place, that is journal. From that journal we may not recollect that information. So, let us take about debtors, let us take about customers. So, like that we may not get correct information whenever we require, because all the information are recorded in that journal continuously. So, there is no separate identification for sales, purchases, bills receivable, sales, cash sales, credit sales. So, like that we may we did not any categorization. So, that is why all the journal entries are recorded at one place, that is a journal. So, then we required a separation, a segregation of transactions we required. So, that segregation is not possible at the end of the year. Of course, may be possible, it may take time, it may take additional manpower requirement. So, that is needed. So, that is why right from the starting we are segregating the transactions right from the starting. Right from the starting means when we are recording transactions in the books of accounts, at that time only, according to the nature, according to the transaction, we have to write in that particular journal. Let us take example, all the sales activities are recorded at one place. It is easy to find out whenever required the data. All the purchase information is recorded at one place. Whenever time required, whenever we required how much purchase, how much purchase we purchased, that we can get easily. So, we can get easily by recording this way. So, that is why all the information is required. So, that is why according to the nature of the transaction, the subsidiary books are to be maintained. Of course, it is too expensive for small type of business units, but whereas in large number of transactions are there, numerous transactions are there in big organizations, those organizations have to maintain this type of subsidiary books, which are applicable, which are useful to them. According to their requirement, subsidiary books are to be used by such organizations. So, of course, small organizations also may be used by this type of subsidiary books. Of course, a less number of transactions are there, then it is easy to identify which transaction is done, which transaction is not done, which type of transactions is more, which transactions are less. So, as per nature of the transaction also we can identify easily, that may be sales, that may be purchase, that may be bills receivable, bills payable. So, like that, according to the transactions nature, we can identify easily when number of transactions are less. When number of transactions are more, that will be difficult to identify, and the segregation, it may take a lot of time. So, that is why when big organizations, there should be maintained all subsidiary books. So, for easy categorization, for easy identification of transactions when time comes. So, that is the need of subsidiary books. So, without subsidiary books, we can't go into the business, because when we have more number of transactions, it will be very useful and convenient and affordable to the organization also. So, one should maintain subsidiary books, that is the need and a necessity of the subsidiary books. When less number of transactions are there, of course, there may not be required, it may be expensive to such type of organizations. Of course, in present scenario, when we take any type of organization, we have numerous transactions, number of transactions. So, it is easy to avoid confusion. So, that is why when it is maintained, it will be avoided to our confusion. So, that is why all the subsidiary books are to be maintained by the organizations. So, here we see it requires basic knowledge of accountancy, as if any of the entries are recorded incorrect, then it will be a problem or they need to be rectified. The following books are known as subsidiary books. So, here accounting knowledge is necessary. Without accounting knowledge, all these types of books may not be maintained properly. So, that is why to maintain this type of books, or you can say to maintain subsidiary books, accounting knowledge is must and should. So, that is why accounting knowledge, those who have accounting knowledge, they can maintain properly, systematically, efficient manner. Those who have not accounting knowledge, they may do mistakes while recording the transactions. It is another one more problem when we are going to do final accounts. So, that is why when recording of transactions, there should not be any errors in writing the transactions. So, that is why to avoid such type of mistakes and errors, we have to maintain all the subsidiary books which we require. So, here according to the nature of transactions, we classified subsidiary books like this. One is purchase book. In this purchase book, of course, we will continue next slide. So, sales book, second one, purchase returns book, sales returns book, cash book, bills receivable book, bills payable book, and one more we have journal proper, that is the last subsidiary book. So, let us see one by one why we are using purchase book, what are the entries are to be posted in that particular book. So, let us see one by one. Right. So, purchase book, the name itself indicates, what indicates? This book is used for recording goods purchased on credit basis. It is also known as invoice book, bought book, purchased journal. It is not necessary to record the transaction in the journal book where they are entered in the purchase book. The proforma is as follows. So, one thing we have to remind, all the purchasing data, purchasing information, goods purchasing information is to be recorded at one place, because whenever we required how much material we purchased, that the data is needed, because the top management has to take decision. So, that is why such type of data is needed. How much material we purchased, at what rate we purchased, how much quantity we purchased, how much quantity we utilized, how much products we produced, how much products we traded if it is trading business. So, like that we needed purchase information. So, that is why here in the purchase book we have to write one of the subsidiary book, purchase book. In this purchase book, all the credit information is to be recorded. Only credit information is to be recorded. Whatever the purchase of material, purchase of goods we purchased on credit basis, those information is to be recorded in this book. If it is purchased on cash basis, you need not write in this book, then you have to write a separate book. Okay. So, when we are purchasing material or goods or raw material on credit basis from the other persons, then such type of information is to be recorded in this type of book. This is not, of course, this is also one type of journal, one of the journal, but in this journal we have to record only purchase information, credit purchase information. Don't write other information, other relevant information. Other means sales, returns. So, like that bills receivable, bills payable, cash, so etc., are not to be recorded in this book. Here only recorded purchases, though the material is purchased on credit basis, is to be recorded on this book only. If it is purchased on cash basis, need not to be written here, that you have to remind. Okay. Here, to maintain this type of record, we have some proforma, that is, so you see in first column date call, on what date we purchased material, on what date we purchased goods on credit basis, that is the date, on what date we purchased that material, that date column is to be written here. particulars from whom we purchased, the material, that we have to write in the second column. Invoice number, when we are purchasing raw material, we have to take one receipt, one invoice. Each and every invoice will have a number. That invoice number is to be written in that column. So, on which document is supported for this material, that is why invoice number is to be written in that column. So, where it is to be posted, on which page it is to be posted, from where we are purchased, from whom we are purchased. So, that is why ledger folio page number is to be written. How much amount we purchased. So, let us take example from XYZ company we purchased, PQR company we purchased, and Ramu company we purchased, Somu company we purchased. So, from different companies we may purchase materials. So, all the different company informations are to be recorded here. Then the total purchase information we will get. Then according to the persons also, according to the firm also, we can get the information. Date wise we can get information, amount wise we can get information. So, that is why the total information regarding to purchase of material, that information is recorded here. So, that is a specific purpose this purchase book is used. So, that is why this is one of the subsidiary book. This is the specific purpose only for credit purchase, only for credit purchase. So, that is why this is a specific purpose subsidiary book where we are using. This is the Proforma. Okay. I think you got the information, you got the idea. Next we will see sales book. Next one more subsidiary book, that is sales book. The name itself indicates sales book is used for recording goods sold on credit basis. The record in sales book is made from the outward invoice book, which contain the exact copy of each invoice sent out to the customers. The Proforma is as follows. Here earlier, in the earlier book, earlier subsidiary book, purchase book, on credit basis whatever the material we purchased, those information is recorded in that book. Here sales book, here also earlier we purchased, later we may sell. So, earlier raw material is purchased, some process is taken place, then the output products is to be sold out, or we may purchase products from other persons and we are trading to others. So, then also we may sell. So, that is why the selling information is recorded at one place. The selling information, whatever the sales value is there, sales products are there, though that information is to be recorded at one place. For that purpose the sales book is maintained. Here the sales book only one information gives us sales information on credit basis. Here also same, we do not write any cash sales, do not write any cash sales. If it is cash sales, you have to write some other place. So, that is why here you have to write only credit sales. Earlier credit purchase, now credit sales. This book gives us only credit sales information, gives us that information is recorded here. This sales information Proforma is like this. Here also we have 5 columns. A date column, on what date we sold out, on what date we sold out, particulars, to whom we sold, for that the information we require. Invoice number, outward invoice number, earlier inward invoice number, now outward invoice number. So, Earlier when we purchased raw material, definitely we will take one invoice from other party, those who are supplying goods. Now also when we are supplying goods to other party, now we have to give some invoice, that is outward invoice. This outward invoice number is to be recorded here. Based on that information only we are recording here. So, evidence. So, without evidence we do not write any transactions in the books of accounts. So, that is why outward invoice number is to be recorded here. Next, ledger folio. What is the page number? We have to write how much amount we sold. So, that like that you have to enter all the information regarding to sales. So, in the same way we have to write the all the information that is here only sales information, credit sales information gives us. Okay, this is the information, right. Next we will see one more, that is a purchase returns book. So, just now we know purchase book, purchase on credit basis, and purchase on credit basis and sales on credit basis, those information is recorded. So, sometimes we may purchase, after that on some criteria basis, on some conditions, we may return the goods, we may return the material. So, that is why from where we are purchased, that material may not be good, may not be fit what we are ordered earlier. So, sometimes in transportation also goods may be lapsed, goods may be damaged. So, quantity may not be sufficient, quality may not be sufficient. So, due to that reasons the rate may be different. So, earlier we ordered 100 rupee per kg, they supplied 80 rupees per kg. Like that we may have various reasons to return the material. So, that is why here we may return the goods. Let us see, the book used for recording goods return for the seller is called purchase returns book, also known as return outward book. While returning goods, buyer prepares debit note, right. So, here earlier we already purchased on credit basis, that material is received by the firm, that information is already recorded, but due to some reasons from that material we may return some material, So, that is why to record that information, returns information, we may use this book, this subsidiary book, that is purchase returns book. This book gives us the information about purchase returns. So, whatever we purchased earlier and whatever we are returning to the supplier, that is the information here we recorded. So, of course, here when we are returning material, we have to prepare debit note, right. So, here also we have some proforma. In this proforma we have to maintain. So, date is to be written, on what date we returning the material. So, earlier on what date we purchased the raw material, okay. After that on what date we are returning the material, that date, the date is to be written here. Next, particulars, to whom we are sending. So, earlier we discussed Ramu company, Sumu company, XYZ company, PQR company. So, like that we may have different companies, from where we are purchased, to whom we are returning. So, example, we purchased from XYZ company. Is it possible to return PQR company? Not possible. So, we have to return XYZ company only. So, that is why to whom we are returning the goods, returning the material. So, that is why that information is to be recorded here. next page number is to be recorded, debit note number is to be recorded here, and amount, how much amount of value we are returning. Earlier we may purchased 1 lakh rupees, earlier we may purchased 1 lakh worth of goods, in that we may return 5,000 or 10,000 rupees value of material we are returning. So, like that, how much value worth of material we are returning, that you have to write here. So, that is purchase returns book. This is the information. Already we purchased material from suppliers on credit basis. After purchasing, due to some reasons, the material may be returned to the supplier. So, the reason may be difference of the rate, quantity, quality, and maybe packing, may be damaged. So, some due to some reasons that may be returned. So, that is why purchase returns book gives us this information. Next, so that information is provided here, purchase returns. So, let us see next book, sales returns book. Sales returns, it is a book used for recording goods returned by the buyer, also known as a returns inward book. While keeping records in sales return books, sellers prepares a credit note. So, that is sales returns book. So, earlier we sold some goods to the customers. Earlier we sold some goods, some raw material to the customers. From the customers, whatever the goods we sold to the customers may not be satisfied with our goods regarding to quality, regarding to quantity, may be damaged in transportation. So, like that we may have different reasons. Due to that reasons, the goods may be returned to us, returned to the our firm. So, in this connection, the customers returning the goods. So, on what date we purchased, on what date we sold out the goods, to whom we sold out, on what page we return, and credit note number and amount. So, like this is the information we have to maintain in sales returns book. This is the information. So, this book is also needed to identify sales returns. What are the sales returns we have in our company, in our organization. So, that information gives us this subsidiary book. Okay. I think you got the idea. So, this is inward, what we say, this is inward book, earlier outward book, because we purchased and we return. Now, we sold and we are receiving. So, that is why this is known as inward book. So, like this we may have a sales returns book. Of course, here also whatever the sold sales we did earlier on credit basis, that information is recorded here. That information, the material returned from the customers, that information we recorded here. That is the information conveys this sales returns book. So, with this Proforma we have to maintain all the sales returns information. So, until be known purchase book, sales book, purchase returns book and the sales returns book. These are the 4 books what we learned so far. So, these are the 4 books. First 2 books are purchase books and sales books, that information regarding on credit basis only. Next one, purchase and sales returns, purchase and sales returns, these are the information earlier we sold out or we purchased on credit basis, that information is recorded. That means these 4 books consist only credit information, not for cash information, only credit information. So, whatever we purchased on credit basis, whatever we sold on credit basis, that information gives us these books. And a returns information, sometimes we may return, sometimes others also return, customers may return and suppliers returns. So, like this, these are the four books. Next book, cash book. Cash book, here we see cash book, to record cash transactions, separate book is kept which is called cash book. The function of cash book is to keep records all cash transactions. Cash book takes the place of cash account, that is, it is not necessary to open separate cash account in the ledger after keeping a record in the cash book. Types of cash books as follows. So, let us see this one. Earlier subsidiary books are used to record credit information, This book belongs to this book is used to record only cash transactions, So, that is why here there is no credit transaction, earlier there is no cash transactions, now we do not have any credit transactions. So, for only credit transactions we have to maintain a separate book, that book is known as cash book. Here in the cash book all the cash transactions are recorded, there may be cash payment, cash receipt, whatever the cash we received, whatever the cash we are paying. So, that information is recorded here, So, here also we have 4 types of cash books, So, let us discuss one by one. So, in cash book we have debit and credit columns. This cash book contains Proforma, this account type Proforma, T-shape Proforma. So, left side part is known as debit, right side part is known as credit. So, on left side, that means on debit side we have to write all the cash receipts, on credit side all the payments we have to write. So, when we are recording on debit side receipts, we have to start with 2. When we are writing on credit side as payments, start with by. So, this cash book contains opening balance, because before day what was the closing balance, that is to be recorded here as an opening balance, So, that is why cash book contains maybe opening balance, sometimes of course may not have opening balance. Is it possible? Not possible, opening balance must be there, or we may have cash receipts also. Sometimes we do not have any cash opening balance, then cash transactions will be there, cash receipts was there. So, that is why without cash receipts there is no cash payments, there is no cash payments. So, if we do not receive any cash, how do we pay payments? How do we pay? So, that is why there is no cash receipts, there is no cash payments. Of course, there is cash receipts, of course, there may there is no payments. So, that is why what we say here, there means here in the cash book there may be equal payments to the receipts, or maybe higher than the payments of receipts will be there, higher than the payments of receipts we have. So, that is why always cash book consists debit balance, cash book consists debit balance. Of course, sometime we may, when we are preparing bank reconciliation statement, we may say cash book consists credit balance also, generally we can take, but always we can say cash book consists debit balance, because all the cash receipts are recorded in debit balance. So, cash payments are recorded on credit side, payments. So, payments may be equal to receipts or may not be equal to receipts, but not more than receipts, payments not more than receipts. That is not possible, because if we do not have any cash, how can we pay? Let us take one example. If we have 100 rupees, that may be included opening balance and cash receipts. Now, as on day we have 100 rupees. How do we pay? How much we pay as payment? How much we pay as payment? So, we can pay 1 rupee, we can pay 10 rupees, we can pay 50 rupees, we can pay 70 rupees, we can pay 90 rupees, we can pay 99 rupees, we can pay 100 rupees also. So, what does it mean? We may pay whatever we received as receipts until that limit, or below that limit, up to we may pay our cash payments, So, that is the introduction part of cash book, right. Here let us see what are the types of cash books. Let us see one by one. So, here cash books are classified into 4 types. One is simple cash book, another one is double column cash book. So, we can say first one single column cash book also, single column cash book, double column cash book, triple column cash book, petty cash book. These are the 4 types. These are the 4 types of cash books we have. So, let us discuss one by one. So, simple column, simple cash book. So, it is time up. So, we continue in another video class. So, that is why we remind one more time whatever we discussed. So, this classification of cash book we will continue in the next video lesson. So, we will remind one more time about this whatever we discussed earlier, that is purchase book, sales book, purchase returns book, sales returns book, and cash book. So, these are the books we discussed. So, first 2 books, purchase book and sales book, are purely for credit information, purchase information at one place and sales information at one place, that all the credit information. Of course, a business organization may depend upon cash transactions and credit transactions. That is why all the credit information recorded at one place, that is purchase, and all the credit sales information is recorded at one place, that is credit sales. So, that is why we can get the information at one place. The remaining 2 books, earlier whatever credit information we have, whatever returns information we will have, that is also is to be recorded here. So, that is why all the credit information are recorded in the first 4 books, that is purchase book, sales book, purchase returns book and sales returns book. So, these are the 4 books, and next one cash book. This is we are discussing. We will continue in the next video lesson. Simple cash book, double column cash book and a triple column cash book, that will continue in the next video lesson. Please watch regularly and subscribe my YouTube channel. If you have any doubt, you can ask me in the description chat box, or mail me. You can mail me, I will clarify. So, I will explain in detailed manner. If you have any doubt, I will rectify. I am ready to clarify to you. So, in the next video lessons we will continue. After completion of theory part about this subsidiary books, we will do problems also. So, please subscribe my channel. Please subscribe my channel. Thank you one and all.